if the stock markets come crashing down, won't gold go up? I can see how Bitcoin could go up a little bit because, well, that's just another place to put your money. But isn't gold really going to go up? Okay, so let's deal with just that issue, because when we start dealing with Bitcoin, when we start dealing with central banks and interest rates, inflations, tariffs, and Kim Jong-un, the video ends up being 40 minutes long. So what's going to happen to gold when the stock markets come crashing? If the stock markets come crashing, won't gold go up? Yes. So if the stock markets keep crashing, keep multi-year recession maybe, or at least a multi-quarter recession, won't the price of gold keep going up? No. That doesn't make any sense. Why would the stock market going down that will drive the price of gold up suddenly make the price of gold go down when the stock market goes down? Well, basically because all the money from the stock market and all the money from gold were going to Bitcoin. But we decided not to talk about Bitcoin here, right? So let's not talk about Bitcoin. And tell you what. Well, that's kind of stupid and biased and one-sided because you're a Bitcoin fund manager. No. And here's why. The reason why you think that gold will go up when the stocks go down is because gold has always gone up when stocks go down. But stocks haven't really been around for more than a couple hundred years, right? How long has NASDAQ been around? Not only that, but during this time when that one factual statement applies, now you have to zoom out in context. Factual statement. Here's the factual statement. Every time the stock markets have gone down, gold has gone up. Fact. Zoom out, and what you see is that fact only applies during the time when the stock markets have actually existed. And the stock markets have actually existed only during the era where there's an industrial age and now an electronic age. Industrial age, guess what it used? Industrial age, the most highly conducive electrical, yeah, you guessed it, gold. It's the best conductor of electricity that's commonly available, well, not commonly, but it just drove up the price. So central bankers bought it because they knew that, hey, electronics aren't going away, and industry isn't going away. Mechanics isn't going away. It's the easiest to mold. It's the easiest to use. It's the heaviest, and it melts at a low boiling point. So we're going to use gold, and gold demand just went up higher and higher and higher. Back before the industrial age, oh man, now I'm going. Let's just say gold is so malleable, it's easy and it's sparkly. So all the kings liked it, and because it's hard to find and it's easy to turn into like goblets and stuff. And if you bit it, you could egoically see your teeth marks in the gold, so it made you feel good that you have the power to put your teeth marks in metal. That's why people liked gold. I'm not kidding you. This is exactly why kings and their big fat egos liked gold and made gold really expensive, because they could see the teeth prints, their own teeth prints in metal. That the common man couldn't put teeth prints in metal, but I can because I'm a god. So yeah, you might think it's funny, and it is stupid, but that's exactly how these kings thought. So anyway, gold gets really expensive, and you can make real simple thrones, and it's real easy to craft gold. You can't do that with iron as well. It's super hard to make really ornate sculptures with iron, so they just use gold. Okay, anyway, so gold price kept going up. That's pre-industrial age. During industrial age, same thing. You're going to need electricity. You're going to need gears, mechanics, that sort of thing. Electronic age. Back in the 70s, IBM started making computers, and then Sony started making Walkman, and then everybody, anytime electricity passed through anything, yep, you guessed it, gold. Gold had to be used. And every single time the stock markets went down, gold was getting higher and higher demand by industry. Until, now what age are we in? Are we in the electronics age? When's the last time you upgraded your Sony Walkman? When's the last time you upgraded your Dell PC? When's the last time you added RAM? Now, your PC motherboard, your CPU, your RAM, your Sony Walkman, I don't know about the Sony Walkman so much anymore, but the iPod, yes, the iPod, they all have gold in it. Or they all had gold in it. If you still have it, it's probably out at some junkyard and it's been melted down and the gold has been taken out of it. When's the last time you bought? I'll show you when the last time was. Hang on. I'm gonna remove this from my tripod. I'll show you. Here. This is just last year. Super, super high resolution. Just 1 year. Look at the demand for electronics go down, which is the demand for gold. This is exactly the demand for gold. I'm gonna go zoom out now and show you some other ones. Howdy hum, let's see. Where's another good one? Here, Fred. Can you see this? I'm trying to look at it with you. So bear with me, it's gonna be steady and not steady and shaky. Okay, here it is. Producer price index by industry, electronic computer manufacturing. Look at that, boof. From 1990s to 2016, 2017, just died. This is gold consumption. This is computer consumption. This is CPU consumption. This is circuit board printing consumption. This is high conductivity electronics consumption. Okay, let's look at another abysmal chart. Let's see, abysmal charts, where are you? I had a bunch of them just a second ago. Actually, I guess I'll show you this one. Hang on. Here's a great one. Look at that. Number of manufacturers with leading edge production capabilities. Not only is consumption of electronics going to zero, the number of manufacturers, they're just going out of business left and right. This is how many nanometers that someone could produce and how many corporations that could produce this nanometer. As the nanometers get smaller, nobody's producing them anymore. Here's the one I wanted to show you. From 2001, you see that 2001 all the way to 2016, this is insane. This also shows you employment, manufacturing, sales, and GDP, all falling at just about exactly the same rate. And this is the rate at which gold demand is falling. So basically, in the past, what the central banks did, they're smart people, right? They're the smartest people on this planet financially. What they do is, they would see a stock market collapse impending, they would sell stocks and buy gold. Because as the stocks of all these, yes, industrial companies, all these electronics companies, IBM, Apple, for every single dip these manufacturing companies had, they would still need to buy gold, and that dip, that bounce from that dip would require more and more gold. So they would keep buying it, except this time. Except this time. Now, we haven't had a major dip for 10 years. 10 years. During that 10 years, what happened? This happened during those 10 years. During those 10 years, people stopped buying Sony Walkman. They stopped buying Dell desktop computers, and they stopped upgrading their RAM. And they stopped buying fancy GPUs so that they could play World of Warcraft or whatever you play on your computer anymore. You're just using it on your smartphones now. So what's going to happen? Central bankers, again, aren't dumb. They know all these figures. So what they did was they bought gold just like always, knowing that when the stock markets would go down, which they are going down right now, that everyone would rush to gold. But here's the trouble. Here's the trouble. The last time they bought gold first, they could sell it to the retail consumers, saying, hey, here it is, here's gold, really, really expensive. Here, more expensive, you still want it? Even more expensive, you're still buying it? Okay, here, take it. They could also, but it became more expensive because industry wanted it, Titans wanted it, Apple wanted it, IBM wanted it, Samsung wanted it, Hyundai, Heavy Industries wanted it, all these chip manufacturers wanted it, Qualcomm wanted gold. Now they don't. Nobody knows that changed. Nobody knows that this is what happened. So mom and pop are going to buy gold and no one's going to buy it from them. And it won't even be pretty anymore around your neck because everyone just, the whole reason people wear gold is to show that, hey, I'm wearing something that's of appreciating value. Just by me being pretty and sparkly, I'm making more money per second than you slaving away in your cubicle. That's what gold represents. That's the Cleopatra effect. This gold that around my neck is making me more money per hour just by holding on to it. Its value goes up than you working in your cubicle. It's kind of this ego thing that gold, now no one's going to want to even wear gold. Gold's number one market is fashion. It's not computers, it's actually fashion, but jewelry. But it won't be anymore because now everyone knows it's a depreciating asset. This is like saying, hey, see this gold? I'm losing more money than you've lost in your entire life by just wearing this gold. Gold is now the fashionable symbol for losers of money and value. So that's why gold will not continue to go up when the stock market continues to go down. It's a gold bull trap. There's no more demand for it anywhere. So we've left the electronic age. We've left the industrial age for sure. We've left the electronic age. Now we're in the distributed age. We're in the AI age. And artificial intelligence, you know what that needs? It needs distribution. It needs, in order for AI to survive without a central government or some editor saying, oh, this is bad, this is good, like Facebook is doing now, right? And Twitter, they're censoring everybody. In order for AI to survive without a censor and totally become what it has to have some kind of governance that's distributed and uncensorable. What is that? You got it. Blockchain. And what's the central currency of blockchain? Well, we promise not to talk about. We're dashmanager.com.